Question 1. During onboarding, Bank Alpha receives a corporate client incorporated in a secrecy jurisdiction nation. The UBO structure reveals multiple layers of trusts and nominee directors. Explain why enhanced due diligence (EDD) is crucial here, and what specific measures the bank must implement, e.g., UBO verification, source of funds analysis, strengthened monitoring. A. Standard CDD is sufficient if incorporation documents are valid. B. EDD, including verifying ultimate beneficial ownership, credible source of funds documents, and ongoing monitoring must be implemented. C. Auto-deny due to complexity. D. Accept with minimal checks since it's a corporate entity. Correct answer. B. EDD, including verifying ultimate beneficial ownership, credible source of funds documents, and ongoing monitoring must be implemented. Explanation. FATF Recommendation 10 requires EDD for high-risk customers like those from secrecy jurisdictions or complex ownership. Verifying UBO, obtaining documentary proof, understanding wealth sources, and imposing transaction thresholds and intensified monitoring are essential. Standard CDD insufficient and auto-denial not required. Question 2. Bank Bravo's relationship manager receives updated corporate documentation showing an additional UBO. How should this change be treated within the KYC lifecycle, considering evolving beneficial ownership transparency rules? A. Ignore, one-time collection only. B. Trigger periodic refresh and update risk assessment and documentation. C. Report immediately to FIU as suspicious. D. Automatically close the account. Correct answer. B. Trigger periodic refresh and update risk assessment and documentation. Explanation. Ongoing due diligence and periodic review must capture changes in UBO. This may affect risk profiling and identify new red flags. It's not automatically suspicious but should prompt update and enhanced scrutiny. Question 3. A private banking client shows high-value incoming wires from obscure jurisdictions, followed by rapid outgoing distribution to multiple shell companies. These patterns do not match the expected CDD profile. According to transaction monitoring best practices, what is the immediate next step? A. Block the transactions and close the account. B. File an STR/SAR immediately without internal review. C. Escalate to AML team for detailed investigation before decision. D. Notify client and wait for explanation before acting. Correct answer. C. Escalate to AML team for detailed investigation before decision. Explanation. Automated flags trigger escalation. AML analyst must review underlying info, determine if patterns signal layering, collect justification, then decide if STR/SAR filing plus possible blocking is needed per regulatory standards. Question 4. Ms. Roberts, an AML officer at FinTech ChatPay, reviews an application from Tom Lee, a high-net-worth individual living across countries. His digital footprint shows inconsistent identity documents and multiple phone numbers. Walk through the risk-based steps Ms. Roberts must follow under FATF principles to ensure ChatPay's KYC remains robust. A. Accept with basic ID check. B. Implement EDD. Independent document verification, geolocation checks, adverse media search, UBO confirmation, periodic review. C. Only verify current address. D. Reject immediately due to inconsistencies. Correct answer. B. Implement EDD. Independent document verification, geolocation checks, adverse media search, UBO confirmation, periodic review. Explanation. EDD requires verifying identity independently, screening for PEP adverse media, documenting source of wealth, and updating periodically. Rejecting without investigation violates fair onboarding. Basic checks are insufficient. Question 5. A client with no face-to-face contact is high risk, yet has low monthly transaction volumes. Under global KYC standards, is this low-volume activity enough to downgrade the account risk level? A. Yes, low volume always means low risk. B. No, risk rating depends on overall profile, not transaction volume alone. C. Yes, digital clients are assumed low risk. D. No, volume irrelevant, only client type matters. Correct answer. B. No, risk rating depends on overall profile, not transaction volume alone. Explanation. Risk-based approach requires holistic assessment, customer type, geography, delivery channel, and expected activity. Low volume doesn't offset high-risk factors like digital onboarding or complex ownership. Question 6. Your monitoring system flags a series of structured deposits just below the regulatory reporting threshold, followed by immediate, large international transfers. Describe the rationale behind filing a suspicious transaction report, STR, and which red flags are triggered. A. Small deposits are irrelevant, no STR needed. B. Patterns of structuring to avoid reporting thresholds and layering via cross-border transfers trigger STR filing. C. Only large transfers matter. D. Wait for customer explanation, then decide. Correct answer. B. Patterns of structuring to avoid reporting thresholds and layering via cross-border transfers trigger STR filing. Explanation. FATF identifies structuring, smurfing, as placement stage red flag. Combined behavior signals intent to launder. Regulations mandate timely STR when red flags are unexplained. Question 7. Mr. Gonzalez, branch manager at Banco Metro, notices a client regularly purchases cashier's checks with large cash amounts just under the FI reporting threshold and wires funds to a high-risk jurisdiction. What steps should Mr. Gonzalez take to comply with AML obligations under BSA? A. Ignore threshold games if individually small. B. Escalate to AML CDD team. Gather structured transaction evidence. Freeze account if needed. File SAR within 30 days. C. Deny future check purchases only. D. Notify client to avoid future thresholds. Correct answer. B. Escalate to AML CDD team. Gather structured transaction evidence. Freeze account if needed. File SAR within 30 days. Explanation. Suspicious structuring requires internal investigation. SAR submission within 30 days under BSA. Unapproved blocking may be applied to prevent ongoing laundering. Question 8. Which of the following sets of indicators are most indicative of trade-based money laundering, TBML? A. Simple cash deposits with no trade documents. B. Discrepancies between commercial invoices and actual quantity value, routing through shell importers-exporters. C. Online gambling payouts. D. Cryptocurrency transfers without trade component. Correct answer. B. Discrepancies between commercial invoices and actual quantity value, routing through shell importers-exporters. Explanation. TBML relies on over-under invoicing, false documentation, shell companies. These are flagged via trade-based red flag typologies from FATF and FinCEN. Question 9. Your compliance unit receives extensive deposit data showing clients receiving funds from darknet markets. According to global reporting requirements, what's the next compliance action? A. Return funds due to illicit origin. B. Block transactions indefinitely. C. Escalate immediately. Conduct formal investigation. File STR SAR to FIU with darknet nexus. D. Monitor for further transactions. Correct answer. C. Escalate immediately. Conduct formal investigation. File STR SAR to FIU with darknet nexus. Explanation. HIDTA and FATF highlight dark web as illicit source. Immediate SAR filing with full details is mandatory. Simply returning or monitoring is inadequate. Question 10. Ms. Sharma, AML analyst at Global Invest, uncovers that a client's account is receiving large intercompany loans with no business purpose, then funneling those to personal accounts overseas. Under FATF RBA, explain why this pattern is suspect and outline the appropriate remediation and reporting. A. Treat as internal error. B. Suspicious layering lack of business use warrants investigation, documentation, escalation, report to FIU, consider account restrictions. C. Contact client for explanation only. D. Notify auditors but no external report. Correct answer. B. Suspicious layering lack of business use warrants investigation, documentation, escalation, report to FIU, consider account restrictions. Explanation. Loans between related entities without commercial rationale often signal laundering. FATF and local AML laws require investigations and STR filing. Internal audit notification is insufficient alone. Question 11. Bank Delta is implementing AI-based transaction monitoring, TMS. What governance and validation principles must they apply to ensure compliance under FATF and Basel standards? A. No oversight needed if AI vendor is reputable. B. They must define model objective train test on representative data, conduct bias fairness checks, validate outputs, maintain audit trail and retrain periodically. C. Deploy immediately, adjust after issues arise. D. Limit to manual review, AI-only flags. Correct answer. B. They must define model objective train test on representative data, conduct bias fairness checks, validate outputs, maintain audit trail and retrain periodically. Explanation. FATF and Basel require robust validation, transparency, reproducibility, explainability. Bias fairness and retraining mitigate performance drift and regulatory risk. Question 12. How does name screening automation mitigate false positives while ensuring effective sanctions compliance? A. Use fuzzy matching indefinitely. B. Tune algorithm thresholds. Incorporate global sanction lists. Conduct risk-based reviews. Document deduplication logic. C. Ignore false positives. D. Only screen once during onboarding. Correct answer. B. Tune algorithm thresholds, incorporate global sanction lists, conduct risk-based reviews, document deduplication logic. Explanation. Efficient sanction screening involves configuring algorithm thresholds to balance sensitivity and specificity, using global watch lists, documenting process, and periodic reviews to reduce false positives. Question 13. Mr. Vasquez works at a crypto asset VASP. His team plans to integrate blockchain analytics to detect mixers used in laundering. Outline the technical and regulatory steps required, and identify red flags such as address clustering, dust transactions, and mixing service flags. A. Mixers are legal, no AML action. B. Implement analytics to identify obfuscated on-chain patterns, cluster addresses, review dust transactions, escalate suspicious patterns, file AML reports per travel rule. C. Ban all crypto transactions. D. Only report if 10 BTC involved. Correct answer. B. Implement analytics to identify obfuscated on-chain patterns, cluster addresses, review dust transactions, escalate suspicious patterns, file AML reports per travel rule. Explanation. AML regulation requires VASPs to detect obfuscation patterns like mixers. On-chain tools identify, address clustering and dust anomalies. Relevant KYC STR obligations apply. Question 14. What role do Reg Tech solutions play in AML record retention, including audit trails and supervisor documentation? A. They automate data wipe after retention period. B. They timestamp logs, store encrypted data in secure ledgers, generate dashboards for audit logs, and preserve manual review rationale. C. Only used for customer onboarding. D. Replace legal requirement for record retention. Correct answer. B. They timestamp logs, store encrypted data in secure ledgers, generate dashboards for audit logs, and preserve manual review rationale. Explanation. RegTech helps firms comply with AML laws on record retention, secure storage, immutable logs, metadata, and audit trails, FATF-R 11. Question 15. In the context of RPA, robotic process automation, for KYC, what control considerations must AML teams keep in mind? A. RPA runs don't require human check. B. RPA scripts must be coded, validated, have fallback logic, logging, exception handling, and oversight. C. Use RPA for all tasks without documentation. D. Outsource all RPA to external vendors only. Correct answer. B. RPA scripts must be coded, validated, have fallback logic, logging, exception handling, and oversight. Explanation. RPA for KYC must follow enterprise standards for IT controls, change management, logging, and oversight. Automated errors without oversight can breach AML obligations. Question 16. Mrs. Nguyen, CTO of a new neobank, deploys a cloud-based AML platform aggregating global sanctions data. Describe how to ensure compliance with data sovereignty rules, encryption standards, and auditability under GDPR and national AML regulations. A. Use default cloud setup. B. Deploy in regional data centers. Enforce TLS at rest and in-transit encryption. Restrict data access. Log all user activities and ensure portability under GDPR. C. Outsource to third party with no review. D. Keep all sensitive data offline only. Correct answer. B. Deploy in regional data centers. Enforce TLS at rest and in-transit encryption. Restrict data access. Log all user activities and ensure portability under GDPR. Explanation. AML and GDPR require appropriate data localization, encryption, access control. Audit logs and change management ensure regulatory compliance. Question 17. Why is explainability in AI-based AML systems critical for regulatory compliance and internal governance? A. Not important, only end results matter. B. Allows analysts to understand why alerts are generated, supports dispute resolution, reduces bias, and ensures regulatory transparency. C. Only needed for marketing. D. Can be skipped if system is accurate. Correct answer. B. Allows analysts to understand why alerts are generated, supports dispute resolution, reduces bias, and ensures regulatory transparency. Explanation. Explainability ensures auditability, fairness, compliance with regs like Basel and FATF on model transparency, and helps investigators justify actions. Question 18. How does integrating entity resolution technology enhance accuracy in transaction monitoring across crypto and fiat ledgers? A. Standard name matching is sufficient. B. Entity resolution maps aliases across wallets accounts, linking clusters to the same customer, reducing blind spots. C. Only needed for FIU sharing. D. Next-gen but not required yet. Correct answer. B. Entity resolution maps aliases across wallets accounts, linking clusters to the same customer, reducing blind spots. Explanation. AML tech with graph analysis is needed to identify underlying customer clusters, prevent layering via multiple accounts, and support robust compliance. Question 19. Dr. Mueller, compliance head at a cross-border bank, discovers the transaction monitoring system's rules haven't been updated in 2 years. Describe the ramifications, including FATF deficiencies, and what remediation steps must follow. A. No impact if no suspicious cases caught. B. Regulatory deficiency exists. Must conduct model review, benchmark rules, incorporate new typologies, validate models, retrain staff, and document findings. C. Only update rules when regulators audit. D. Replace system entirely. Correct answer. B. Regulatory deficiency exists. Must conduct model review, benchmark rules, incorporate new typologies, validate models, retrain staff, and document findings. Explanation. FATF requires systems reflect evolving risks and typologies. Lack of updates may cause regulator findings. Remediation includes validation, rule calibration, and documentation. Question 20. What are the AML risks of using heuristics-only alert logic, e.g., transaction amount threshold, without machine learning enhancements? A. None, simple logic is fine. B. May cause high false positives, miss complex pattern detection like peer group behavior, and not adapt to new typologies. C. Simpler so better. D. Cheaper hence acceptable. Correct answer. B. May cause high false positives, miss complex pattern detection like peer group behavior, and not adapt to new typologies. Explanation. Heuristic rules are static. They create alert saturation, miss nuanced patterns, and cannot adapt. Combining ML enables smarter, context-aware detection aligned with Basel AI principles. Question 21. How should AML technology teams manage false positives in sanction screening to optimize operational efficiency? A. Permanently ignore those cases. B. Tune fuzzy match thresholds, maintain whitelists, ensure feedback loops from analysts, and document SAR rationale. C. Lower thresholds to capture everything. D. Replace tool when too many false positives. Correct answer. B. Tune fuzzy match thresholds, maintain whitelists, ensure feedback loops from analysts, and document SAR rationale. Explanation. Managing false positives is critical. Thresholds must be adjusted, whitelists managed, and reviewer feedback loop used to refine tools, per Wolfsberg and FATF guidance. Question 22. Ms. Taylor, AML architect at Global Bank, is deploying an AI system to detect anomalies in trade finance. She notices it flags repetitive small-value shipments combined with large-value letters of credit. What validation should she do to avoid overfitting or bias, and how to document decisions? A. Trust AI output as is. B. Validate using out-of-sample data. Review feature importance. Engage trade finance experts. Document test results and rationale for thresholds. C. Disable AI and revert to manual. D. Fine-tune thresholds until no false alerts. Correct answer. B. Validate using out-of-sample data. Review feature importance. Engage trade finance experts. Document test results and rationale for thresholds. Explanation. Model validation must include technical review, domain input, threshold calibration, and thorough documentation to avoid overfitting and to satisfy audit regulatory scrutiny. Question 23. Explain why a sandbox approach is effective for testing new AML technology, e.g., blockchain analytics, and what governance controls should accompany it. A. Sandbox unnecessary. Quick deployment is better. B. Sandbox allows design time testing. Controls include limited datasets, user access controls, performance KPIs, risk review, and phased launch. C. Only used for fintechs. D. Just a marketing exercise. Correct answer. B. Sandbox allows design time testing. Controls include limited datasets, user access controls, performance KPIs, risk review, and phased launch. Explanation. Sandboxes reduce deployment risk, allow pilot governance, and incorporate compliance checkpoints before full production, aligned with Basel testing principles. Question 24. What AML governance oversight is necessary when using third-party API-based KYC tools, such as digital identity verification services? A. Nothing if vendor is certified. B. Ongoing vendor due diligence, SLAs for updates, incident response, tech audits, and management reporting. C. Only review onboarding. D. Replace vendor annually. Correct answer. B. Ongoing vendor due diligence, SLAs for updates, incident response, tech audits, and management reporting. Explanation. Third-party KYC tech requires vendor risk assessment, contract oversight, audit rights, and continuous monitoring under AML compliance frameworks. Question 25. Mr. Ali, compliance head at a digital payment startup, finds that foreign exchange conversion patterns are used to disguise fund origins. How should Mr. Ali configure the AML system and internal controls to detect this layering typology using automation? A. Ignore FX. Focus on wire transfers only. B. Integrate FX rails into TMS. Set thresholds on conversion volume rate variances. Track FX chains. Generate alerts. Supplement rules with ML. C. Ban all FX. D. Only monitor high-value trades. Correct answer. B. Integrate FX rails into TMS. Set thresholds on conversion volume rate variances. Track FX chains, generate alerts, supplement rules with ML. Explanation. AML systems must monitor FX activity as layering, capturing conversion events, tracking chains, and triggering alerts with ML enhances detection of complex laundering patterns. Question 26. Which data model approach best supports cross-jurisdictional AML reporting and analytics? A. Flat table per country. B. Normalized entity relationship model with customer, account, transaction, and PEP sanction list linkages, enabling queries across groups and countries. C. One-off spreadsheets. D. Only store KYC docs in PDF format. Correct answer. B. Normalized entity relationship model with customer, account, transaction, and PEP sanction list linkages, enabling queries across groups and countries. Explanation. A relational data model supports comprehensive entity resolution, cross-border analytics, and regulatory reporting. Flat files or separate spreadsheets inhibit global oversight. Question 27. Why is real-time transaction monitoring increasingly necessary compared to end-of-day batch processing? A. Batch is enough. B. Real-time enables immediate response to theft fraud, timely blocking of sanctions hits, and complies with regulations requiring immediate intervention. C. For UI only. D. Only necessary for crypto. Correct answer. B. Real-time enables immediate response to theft fraud, timely blocking of sanctions hits, and complies with regulations requiring immediate intervention. Explanation. AML regulations, e.g., OFAC, require real-time blocking of prohibited transactions. Swift intervention minimizes risk and aids compliance expectations. Question 28. In an AML Model Governance Committee, what roles should be represented and why? A. Only compliance. B. Compliance, risk, IT, front office, internal audit, for balanced validation, integration, and oversight. C. Only IT and legal. D. Only management. Correct answer. B. Compliance, risk, IT, front office, internal audit for balanced validation, integration, and oversight. Explanation. Broad representation ensures models align with operational, technological, compliance, and audit perspectives. This multidisciplinary governance meets FATF and Basel expectations. Question 29. Ms. Lopez, lead data scientist, must improve alert triaging efficiency at Bank X. She suggests building an ML classifier to prioritize alerts. What data and process design considerations must she gather to train responsibly and satisfy regulators? A. No design needed. B. Collect historical labeled alerts, define features, transaction amount, geography, typology, split train test sets, embed bias checks, maintain explainability, validate thresholds. C. Immediately deploy the model. D. Use generic open source data only. Correct answer. B. Collect historical labeled alerts, define features, transaction amount, geography, typology, split train test sets, embed bias checks, maintain explainability, validate thresholds. Explanation. Responsible ML requires curated data, feature engineering, model validation, bias mitigation, and documentation for regulatory transparency and audit. Question 30. How can blockchain-native identity protocols, e.g., DID verifiable credentials, enhance AML compliance? A. Not relevant. B. Provide cryptographic proof of identity, enable portable KYC, reduce redundancy, and support dynamic verification within regulatory frameworks. C. Only for tech demos. D. Replace AML professionals. Correct answer. B. Provide cryptographic proof of identity, enable portable KYC, reduce redundancy, and support dynamic verification within regulatory frameworks. Explanation. Decentralized identity standards allow cryptographically verifiable credentials, streamline onboarding, and improve cross-institution KYC consistency without undermining AML safeguards.